D Public Enemy #1, 506 Freeze. Hey, good morning. Howdy doody to you. Hey, what day is it? It's, let me double check. It's a Tuesday, August 28th, 2018. This is your daily Forex trading strategy session. Brought to you by TradersWay.com, hosted at Forex.Today's YouTube channel. Please subscribe to be alerted to future things if you're watching a video of this in the future, which would be watching a video of the past, but it hasn't happened yet, so that would be in the future. If you're attending live, get on you, mate. Then give it a like. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. Ni hao ma. I'm the Chief FX Market Strategist for TradersWay.com. FX Market Strategist. Thank you for being here this morning. Already got a thumb down already, huh? That's cool. I appreciate that. Logging in just to heckle is quite a dedication, and I appreciate that. So please visit TradersWay.com. Open up a demo account today. We'll work hard for you. That's our promise. Fast execution speed, competitive spreads. If you want an ECN account, we got that for you, whatever you want. Sorry, it was on. Yeah, guess so. So anyways, nice to have you here. Happy Tuesday. We're eking our way out of the summer doldrums, like I said. Now look back at some of these charts. Remember how dull it was 2 or 3 weeks ago. And I said, this is when you're supposed to be doing the hard work, when everyone else is crying and everyone else is wimping out. You need to be setting up your trades. You need to look for the support. You need to put it together. And I said, everyone else is going to be lulled asleep and lethargic. They're going to wake up in the middle of September and realize they missed a 400 pip move. What do you think now, guys? You see some of these moves? Even ugly pound yen is moving. Isn't that neat? That's called doing your job. That's called doing your analysis. That's calling having a bias. That's being prepared based on your research. Right? And while everyone else is whining, you're dining. Well, not really dining, but you're setting things up. Being prepared. So I think, hopefully you've seen, sort of the ultimate lesson. It's all about thinking ahead, not necessarily looking into the past, right? So I would say pretty much every single one of these moves we prepared for and predicted weeks and weeks and weeks in advance. So that's really cool. So I'm glad to see some of these things are starting to come together. So why don't we just start here? Okay, looking out way out in the past, this has been going down for well, really years. And maybe, just maybe starting to turn the corner. Okay, remember this is the week here that we were expecting a turn, a potential change in direction. Right? Then the higher high, then the higher low, then the higher high, then the higher low. I mean, that's pretty cool, right? I wonder if we can see that on a 4-hour chart. And it's fairly accurate assumptions, right? Right? Do you remember doing this before it happened? I mean, that's the whole point, isn't it? So how do you predict such moves? Where does the magic come from? Oh, there's no magic. Higher high, higher low. You got to have a higher low. there's two places where you're going to find support, right? The 4-hour 21 or this pivot point. Just happened that both are accurate, right? Now, here's the interesting thing. Friday was our first swing trading group meeting in, I don't know, 12 or 13 or 14 weeks, right? 20 weeks. I don't know how long it's been, but it was our first get together. So this is actually part of the trade plan we did on Friday, where we talked about kicking off this area with a front run in mind. But if you miss that, then the pullback into here, which is, right, the 4-hour 21. And I'm just guessing it's here. And I'm showing looking left and all that kind of stuff. But back in here, having the plan that it should make a higher high, should retrace, and then potentially can head back up, which is kind of cool because it's, you know, relatively done that, huh? Don't you think? Right? So to go back in time, when we were here, said it would go up, it would come back down into this area, and then head up using the roll reversal and the 4-hour 21 as your entry. Luftlicht, Tulliman. I know I'm right. Right? I know, right? So that's cool. So anyways, that's just another sign of something that has been bearish for years and years and years. Suddenly, it's starting to head up. And of course, it never hurts to say it again. This is the third week of August. And I said in January, the third week in August, this would change directions. Not the second week, not the fourth week. Now, that is cool, huh? Isn't it? All right. Well, unbelievably lucky coincidence anyways. And I'm happy to accept that. Good. Let's get off the yens. Yeah, boy. Well, it's not amazing, right? It's just hard work and research. Right? If anything is amazing, it's only because you're missing something. And then once you find out the secret to the trick, then you're like, oh, well, that's not that amazing. That's the thing about magic. You're like, oh, yeah, well, now that I understand that, it's not that amazing. Right? Here we got this thing going now, euro dollar. This was the big challenge, remember? We said there may be bears here, and there's definitely bears here. So you need to start actually putting together a counter trend trade. If you're a bear, let's try this. I guess I got to back out. If you're a bear, you need to start putting a trade plan together in this area to the downside. Okay. If you're a bear, that's what I would look for. Okay. Somewhere up there is going to be your resistance. That's something we did even last week. We pointed that out as potential resistance. Okay. Remember, I don't really consider this an uptrend yet, even though it's been up since the third week of August. Okay. So we'll see, right? Notice this could be very interesting for other long-term reasons. If you're a long-term euro dollar bear, having this drop, let's say fairly significantly, would be a dream come true. So let's say all the way back to down to this area. Okay, up to this area and really down would be the next one for you. That would be your dream come true. That is totally possible or certainly plausible. I don't want that to happen, but what I want is irrelevant. Irrelevant, right? You will be assimilated. Okay. And bulls, you still got to take a profit up here anyway, so what's the difference, right? Oh, Raymond caught the swing at the 4-hour 21. Cool. Yeah, the problem with those trades is, you know, they're Monday trades, right? You see the potential now, like if you're in it Friday, there's that extra space. Now, you took the risk, but now you got the extra space for breathing room, right? No, I think he means more of this one. Now, if it's that one, then that's cool. That's even cooler. But see, I wouldn't call that the 4-hour 21. So you remember, if you're talking about catching the 4-hour 21 on a swing trade, you're telling me you caught it out of position. You're bullish in a bullish market, so you use the 4-hour 21, which means by definition that would have been a Monday. So that tells me you're over here. Now, if you're here, you're not in at the 4-hour 21. Now, okay, the 4-hour 21's there, but that wouldn't be the basis or the logic of that entry. The logic of the entry would be the role reversal, but more important, the swing zone, right? So you're here, happens to be the 4-hour 21, but a much different logic, okay? Much different logic. So which one is it, Raymond? Is it 1 or is it 2? Yeah, cool. Did you move your stop to break even? Good. Well played. So now the big decision you're going to have then, Raymond, is where do you take your profit? Are you going to take it, let's say, 117? I guess we're at 117 now. Do you go a little further and catch it at 117.40? Or are you going to wait for 117.55? You could even go for, you know, basically 118. Probably not, but, you know. So I would say, if I were me analyzing my own risk, this would be the for sure. Okay. And I don't care if it's 117.44 or 117.55. I don't care. And who cares about the last 10 pips, right? Because that's where the uncertainty is. But we certainly know that that is resistance, top of the range. Most likely it's going to come down to the bottom of the range. And what we don't know is if it rallies up and makes a higher high, or if it collapses and makes a lower low. Those are the things we don't know. Okay, but this trade here is pretty straightforward, so I'm glad you caught it. Have any of my other swing traders caught any of the swings since our meeting on Friday? Looks like Raymond got one. Mike says, if you thought you were in a trend, would you jam your stop and add in? Well, so now you're talking monthly. We're not in a monthly trade, okay, per se. This is a counter trend. This was the monthly trade. Sell, take profit. So you're kind of doing it, but you have to realize if you're in here, which you were supposed to, then yeah, you can much more afford it. This is late in the game, and when you catch a 4-hour 21, it's a second chance. And what I teach you is that if you catch it on a Monday, you're probably taking profit on a Tuesday. The reason for that is it gets elevated too quickly in the process, and whoever's in here is going to bail and take profit here at this hardcore resistance for 3 or 4 different reasons. So it's probably going to retrace all the way back to break even, if not even. So you have to put it this way. you have to plan for it to go at least back to here. And if you're in here, that means you give everything back, but it's really hard to take profit when you give everything back. So you might as well just take profit up here and then wait for the next best setup. Or you take the risk and you're like, yeah, this is going up until the end of the year, and then you take that risk. I don't believe we're on the free and clear plan yet, right? But in September, we might do something more like that. And that would make me happier. And this type of move, you know, let's say the September move, that I would hold for. Okay, so it really comes down to where your entry is. Okay, so Tucker got several yen pairs, all swings, beautiful. James got 3, but just took early profit. All right. Jeanette's one of these, cool. Mike got Aussie yen, good for you. Raymond got 5 of our swing trades. Nice. Dang. All right, so good for you. Are they all profitable? I would assume so at this point. So let's go over at USD Kitty Cat. Nice. Yeah, all profitable. Yep, everyone's, yep. All right, look at you guys. Yeah, well, don't get too confident. Just keep doing it for a couple of years and then gain some confidence, right? All right, so we have all this planned out. I think you guys remember this. We covered it for 2 or 3 weeks in a row until it was boring. And now it's done everything it's supposed to do, right? Cool. Look at the double top, lower low, lower high, lower low. Beautiful, beautiful, beautiful. Everything's good on this one. We're getting toward our pivot profit zone. So expect a pullback here. Okay, expect a pullback. Another way of saying it is if you did sell up here, like we talked about, for every day for a week, actually every day for 2 weeks. This is if you shorted Friday, let's say, if you shorted on Friday or the previous Friday, so 2 Fridays ago, then last Friday, you need to take your profit soon or now, basically in this green zone. Check this out, swing traders. That was the sell. That's the perfect, absolute perfect sell as a bear. This price right here. It's exactly to the pip. Okay. Mike says, thank you. Cool. Okay. So anyways, be careful because when you hit your weekly target early, very often it comes back. Don't be a buffoon though. Don't throw down a blind counter trend trade. Like, oh, Wayne says this is going to go up. I didn't say that at all. All I said is this was where a conservative, disciplined bear would take profit. It could easily fall to this next level. It could fall forever. But where does a conservative, disciplined trader take profit? And it should be here. A counter trend doesn't have to happen because the trend is more likely to win. Okay? So if you see it form a double bottom higher high scenario, you could say, oh, it's going to counter trend into the next short position, right? But you don't want to get in a habit of trading all of these. And for some reason, it's easier for traders, I think. I see a lot of counter trend trading. When I analyze someone that's only been trading for 2 or 3 years, for some reason, more than half of their trades are counter trending. And I think it's because they missed the obvious ones. And there's this attitude of, it can't fall any further. So they start, a career of standing in front of a moving freight train, betting that it will stop in time. And you can't be wrong too often in scenarios like that. So for some reason, they'll long it here and they'll long it here, but they won't short here and they won't short there, right? So we got to change that mindset around. You need to wait, and then sell. So anyways, what I'm trying to say is this is an area that you're supposed to be taking profit and not supposed to be counter trending, which means buying. But you have permission under these market conditions of oversold, okay, oversold at the beginning of the week, okay? So whoever sold here is supposed to take profit, okay? And then on the monthly basis, okay, if you really want to be stubborn, okay, and you were short here, okay, there's a difference. If you're short here or here, you're kind of late to the party. If you're short up here, this was your target 2 weeks ago. So yeah, by all means, a weekly S2 is not going to scare you up, but it's still a pretty good reason to take profit. But whoever shorted sooner than that, you know, there's a reason we use technical analysis. This is telling all bears that risk to their position is increasing. That's all that tells you. Okay? So, as the risk manager for your position, what do you do when your tools are displaying higher levels of risk? Well, ideally, you do something, right? Does that make sense? At very least, move your stop. But even then, is that disciplined? At what point are you going to teach yourself to just do your job? Like, at what point do you remove hope? Like, oh, well, I don't want to get out here because it might fall further. Yeah, good, it might. But when you get past that, when do you trade with certainty? Because when you trade with certainty, then as a bear, you will sell here. You will sell here. You will sell here. There's no doubt about it. Those are the places you sell. All predefined, pre-known, all in the future, all in the past. It's all there. It's all in the analysis. It's like a note on the music sheets. A C sharp is a C sharp, no matter how you feel about it. When you get to that point where this says you get out, okay? So if you're trading here and it's a monthly to you, okay? So remember the two monthlies. This is a monthly, that's a monthly, right? So you have permission, if you're short at any of those levels, to go a little further. But if you're short here, okay, this was your target, 129.22. After that, there is nothing. There's just hope. No, Hassan, I'm sorry. Okay. Can't believe I'm still a little sick. I got lots of sleep. Slept all day yesterday. Here's our oil. No, it's not oil. This is pig dog. Okay, pig dog. So this goes back to the past where bears would sell and bulls would buy. Do you remember the conversation that up in here, we knew that this is where you just take your profit? It might go further. I don't care. There's the Arctic turtle, I believe we talked about. But generally you said it's going to fall and both bulls and bears want it to fall. Do you guys remember that? Going back to August 21st? Can anyone confirm any of those conversations? The discipline to take profit, even though you just made a whole bunch of money really, really quickly, that's where you take your profit. You could Arctic turtle here, but then it still should collapse. And bears could enter and sell. Bulls should take profit. Either way, it should come down. And this is where bulls would buy and bears would sell. Isn't that neat? So what I didn't know is whether it would go up or down. That's what your bias is, right? What we have here is 128.34 is where bulls would buy. That's what I said. Well, okay, it went 20 pips for something lower and then went up, right? But the thing I knew was bulls would take profit here, or I should say should take profit. I know that that's where bulls down here should take profit, which means they'll get out, so it should fall. Bears will probably sell too. That's great. And then what we don't know is will bulls buy it back, but if they did, they would do it from here or from the pivot. Well, in this case, you could see price action 1, didn't it? Price action 1 is much more accurate, huh? So this was the idea. I think we talked about it, whether you're a bull or a bear, you should be able to make money. In this case, the bulls won, and it's the same people that drove that up, right? And of course, you'll get a nice little fib out of it and all that kind of nonsense. So look at that. Was it the price action? Was it the pivot points? Or was it the fib? It was actually the fib. Look how perfect the 50% is. So using Fibonacci, now your target's going to be the 1382. 1382 just happens to be here, which is a monthly and a weekly pivot point. Yeah. I know, right? And also that's a reversal on the 3rd week of August. You're welcome. I'm forever yours, faithfully. And now we're back to the top of our range. This was the buy zone. That was the buy zone, right? So really going quite a bit back onto this this move here. One of the things I tried to teach you with this setup, was that your bias should be steady based on long-term macroeconomics. Okay? You either think the economy is going to improve in the next year or deteriorate in the next year. That's what we discussed a long time ago. And then with that in mind, I said, okay, I'm a bull. So there are 2 plans, right? And I did my analysis and I said, this is a buy zone here. I deleted it yesterday for some reason. Okay, by accident probably. Okay, this was a buy zone here, clearly marked. Okay, clearly marked. I mean, I guess I should get rid of this. Just to make it a little more clear. Okay, so we had this clearly marked. As a bull, I wanted to go up here. And we named the price, very specific, all that kind of stuff. I even had this rally, this pullback, and then, of course, it didn't work. But I said then you should have 2 possible entries that you would consider buying. Plan A and Plan B. That was the reason for this lesson. that if somebody asked you, hey, so are you a buyer of oil? You're like, yeah, I think oil's going to go up. We're a buyer at 66.5 or at 64. Right? Wasn't that the whole lesson? That you know your bias, you have a plan, you can state it clearly, right? We're a buyer at 66 or we're a buyer at 64. Right? And in this case, it came down to 64, our plan B, and it's just rallied like a son of a gun either way. But that was part of our plan. We're buyers, and we know the price of which we would consider buying. I'm not opening my charts every day like this, going, oh, I guess this should fall now. Oh, I guess this should rise now. Oh, I guess this should fall now. Okay? Those are called trade plans. Important, right? There we are, just floating around in space. So if you were a bear, oh my God, this would be an awesome place to sell. Is anyone here a bear on oil? You think the global economy is going to dramatically slow down in the third and fourth quarters? You think we're on the verge of a global recession? Imminent? At our doorstep? But see, most people, even here, even in these webinars, most people do not do basic assumptions like that. And I really encourage you to do that. Go to, let's say, at least 4 of the major central bank websites. And then, since we're talking about energy, go to the EIA or the IEA or OPEC websites, whatever. Just pick one. I don't really even care. So 4 major central banks and one of the energy organizations. Look at their analysis. See what they think is going to happen in the next 24 months, let's say. And then make a decision. Are economic conditions globally going to improve or are they going to weaken? And from that, you can plan out all your trades, fundamental. So Charles says there's a recession coming, just not yet. Okay, which is great. I'm sure he has economic reasoning for that. I don't see it. But then again, so like I got an email today, I think it was from Bloomberg, and they're like, oh, there's signs of, the economy slowing down in China. We should all be really concerned about that. And I'm like, see, I don't read the news. I don't listen to the news. I don't watch the news. I don't care what a reporter thinks. Sorry. I'm sure they're good people. I just look at the facts, and I don't see that data yet. Okay, I see in America, there's so many people shopping, so many people going out for dinner, so many people going out to clubs. There's so many people doing everything. I mean, it's just crazy. Which means consumption is likely high. Disposable income is very stable. But if your income goes up, and more importantly, your expectations for future income is high, then you're out spending like crazy, and very often that stuff gets imported, right? So Charles says not yet being the key word, but here's where you add value then, Charles, right? You can give 2 or 3 very clear economic indicators that will confirm that you are going to change everything. So let's say, put yourself in a situation where you managed $1 billion. At what time do you go from bullish to bearish on $1 billion? It's hard to turn that ship, right? That's an aircraft carrier worth of, investments. Not anywhere you want, anything you want. I don't care about that. But the thing is, if you're a bull, I'm shorting the dollar, I'm shorting the yen, and all that kind of stuff. I got very specific things I need to be doing. Okay? And if I'm a bear, I'm doing the exact opposite. Okay? So when do you go from everything long to everything short? You better have predefined, very specific rules of engagement for such a situation, because you don't want to be terribly, terribly, terribly wrong with $1 billion. Greg says, what about the Treasury yield curve? Okay, cool. The only thing to worry about with that, Greg, is that we live in a world right now where virtually, if not all, probably all major currencies around the world, as far as their yield, is completely manipulated by the central bank. Not influenced or, smooth, but completely manipulated. Right? So, do we give it the same weight as normal? So, back in 2007, I was in New York. I did a 1-hour presentation about the yield curve, the VIX, right, and the TED spread, or, like a 210 spread, and what these things mean, and what they predict. And for example, an inverted yield curve, you'd say, oh, well, we're 6 to 12 months away from a recession. Okay, so if we got an inverted yield curve today, does it mean we're 6 to 12 months away from a recession? Well, I couldn't give it the same weight because, for example, it's very strange to have a 30-year bond pay a yield of what we currently have, right? What's the 10-30 spread? 0.3%? It's like it's strange. It's a strange situation. So, anyways, go through the analysis and make that determination. That's what the value. That's what your value would be as a money manager. Okay. Now, let me tell you, most money managers do nothing. So if you can actually have true fundamental and technical analysis, you'd be better than probably 95% of the professional market for money managers. Most of them are, didn't even go to business school. Now they're managing money. I don't mean hedge fund managers. I mean like wealth managers. So they got a degree in communications or international marketing, and now they work, at a money management firm, and they can't even have a conversation like we just had, and then they certainly don't know technical analysis. So if you could hold your own both technically and fundamentally, you'd be the top of the market. Yeah, PJ, I did 1 or 2 or 3 of those over the last 15 years. I would probably check my old FX Bootcamp videos. I think there's about 3,000 of them. So maybe type in FX Bootcamp yield curve. But the yield curve is so strange over the last 8 years that even when you throw it up there, it's not as helpful as it used to be. So if you went back to 2007, like when I started really teaching yield curve analysis, I would show the chart and it would just blow your mind. You're like, oh my gosh, that is clear as day. clear. And I would explain it using common sense, you know, and it was great. Now, when you look at it, it's strange and it's not nearly as clear. And we've had, I mean, you're right, since quantitative easing started, what, 2008 or whatever, it's been manipulated for 10 years straight. So even if you look back 10 years, it doesn't tell you nearly as much as if I had, you know, the 10 years previous to that. Right? You know what I mean? Hi, what other trades have you looked in? We've gone through dollar pairs mostly and a couple of yen pairs. And then oil. So we'll do gold now, okay? Okay, DIY. We in 2008 flooded the market with free money, but they pulled back a bit, in opinion. Well, they pulled back completely based on it. So, in my opinion, where's the money coming from to prop up the stock market? Well, the fact that the rest of the stock markets in the world suck, and most of the economies around the world are still on life support, that means people still feel more comfortable putting their money into the U.S. Okay? Sort of like when times are bad, foreigners around the world were buying U.S. bonds, driving down interest rates, right? Now, instead of buying bonds, they're buying the stock market. Okay? So, in currency trading, but in global investing, if you want to look at it that, Bastar, everything is relative. Okay? So, where does money come from? Well, it's going to come from other places. Well, why other places? For example, you're Turkish and you're a billionaire. In fact, I was just having this conversation, several days ago now, maybe a week ago. My buddy came over. It might have been Monday. No, today's Tuesday. No, so last week, I don't know. A buddy came over and we're talking about a billionaire Turk that he knows or knows of or follows. I don't know. So anyways, and he said out loud, he's like, well, I wonder how much of his money is actually still in Turkey because he's made his billions over, the last 25, 30 years. I'm like, yeah, none of it. Right? So if you look at what's happening lately, like in Turkey, since the coup d'etat, if you were a billionaire sitting in Turkey with all your money in Turkish lira, and there's a coup d'etat in your government, you're like, oh man, this really points to some uncertainty in my economy. This could be bad for my net worth. At some point, you start moving some of your money, right? So where do you want to move it? Europe? You want to I guess it's better than Turkey, right? But where in Europe? You want to move your money to Germany? France? Right? How about the UK? You want to move your money to the UK? Well, these economies face massive risks. Like London would typically be a place to move it, right? But you're like, well, with Brexit, I don't know. And then you're like, and then if the ECB's problems, if I put my money in Germany, they're just going to give it to Spain or something. Right? You're like, I don't really want to do that. How about Switzerland? Well, if you move it to Switzerland, they'll charge you money for holding it in their bank accounts. So you're like, how about the United States of America? The economy is super healthy. They're at full employment. And they're starting to raise interest rates, which means they'll pay me more for my deposits over time. Right? So most likely I'll get the appreciation in rising interest rates. And the dollar will probably do fairly well to the rest of the world, but also people know that when the US dollar goes up in value, emerging markets like Turkey should lose value. So then you're like, okay, so that would be good for me. So that Turkish billionaire, probably the day after the coup d'etat, started moving money out of Turkey and to the United States of America. Oh, so Janet Jensen says, so why is euro stronger today relative to, or this week relative to before? All right, so now we got to go back to older conversations. That is because on the third week of August, which we talked about way back in, I think even in April. Remember, I was getting ready to go to Harvard, and then I we set all this up, and then I went to Harvard and all this. But it comes down to when investors come back from summer holidays, they're going to start trading again. Okay? And when that happens, the dollar is going to weaken. And I said, this is irregardless to the textbooks that you probably got in college that say when interest rates go up, the value of the currency goes up. And you're like, so Wayne, euro dollar is supposed to be falling. Yeah, that's true. They do say that. But what I think is going to happen is the United States does get overpriced. The stock market does get expensive. You're already fully invested. In fact, if you've made 20 or 30 or 40 or 50% in the stock market in the last 1, 2, or 3 years, now's probably a good time at the all-time high to probably take some profit. But this is profit, so you still have all your original investments still locked in the market. So what do you do if you take that profit? Your principal is still safe. You're a million miles away from that because, let's say your stop's at break even. But let's say you're up 25%. So you're like, well, you know what? We're at an all-time high. You can start balancing, right? Or rebalancing. You can start taking some money off the table, some of your profits. Well, what do you do with your profits? You can't buy the stock market back because you'd just be back to where you were. So do you take it back to Turkey? You're like, why would I bring it back to Turkey? It's even worse. So now you take that money and you start to look at, let's say, riskier opportunities. Because you're basically now investing free money, right? And now you start looking at places like Europe and England. Because you're like, well, I understand they got some problems, but it's cheap relative to what I could buy with the same money, right? In today, right? You get that? Because you just pulled profit out of the all-time high in the U.S. stock market. So couldn't you put it into like the Spanish stock market now? Couldn't you buy some DAX? Probably, right? Couldn't you buy some property in London now that's come down a bit? Right? The only reason to save the money for Turkey is so that you can go to Istanbul and buy yourself a Rolex. You're going to buy it in lira, but your dollar buys 50% more lira than it used to. You get it? Aye, you got to get your Rolex. All right? See if I don't know if you can see that. Anyways. Position size, oh well, that's irrelevant to you. As small as you possibly can get them is the real answer, DI. So for example, there was a time I had a general rule of thumb. For every 100,000 US dollars in cash, I would trade one mini lot. And you'd probably fall out of your chair. And you're like, what mini lot? I only have $1,000 in my account and I trade more than that. Yeah. Right? What's your trading volume? Right? Once you break 100 million or a billion in trading volume, then you'll say, you know what? Okay. So anyways, where are we? So we had some gold. Okay, that's fine. That's fine. Guess we can go and look at some of these yens. Yeah, so Joe, I don't even typically watch the dailies that much because most of my stuff swing. But for buying back in, yeah, you can for sure. So the only disappointing one so far would be the Aussie, right? So our trade plan on Friday, right? You look at this. This is the real zone, though, right? So our plan on Friday was to have it drop and buy it. Cool, right? Last week, that's what our plan was. And we don't even have a higher high yet. That's what I'm saying is disappointing about this. Right? You're only up 40 pips profit. Maybe. Okay. Nothing to write home about. So we did Kiwi, we did CAD. I think we did pound. See, and now you'll see why I typically don't trade USD yen, and we talk about it. Even when it technically sets up, I generally don't get that excited about it. Okay, and it's mediocre at best. We're still, I would argue, we're still in a bit of a range. Okay, and I mean, the trade plan was this, right? I may have even skipped this last week completely because, I just don't trade USD yen. I trade the dollar, I trade the yen, but I very rarely trade them together. So I certainly didn't get excited about it. I'm not looking at this like an inverse head and shoulders or something. I'm not looking at it I'm not even looking at it like an opportunity. Okay. Well, I'd like to really see this move sideways. I'd like the dollar to weaken and I'd like the yen to weaken. That's really what I want to see. Is there something I haven't covered that you would like me to cover? I'll open it up to requests. What do you think about gold? I already did gold, so I haven't changed my opinion on that one in the last 20 minutes. Yeah, it has to be very, very close to the first. Okay, as close to the first as possible. In particular, the first of the month if it's near a Friday. Because what I'm really looking for is payday. Mickey. Mickey says Aussie dollar. All right. Yeah. Hey, you ready to get back with the group? Got to get the group going. Hey, Highlander. Aussie. All right. Okay. So what would I think about this? Well, it seems a lot like support. Okay. If I go to an hourly, if I'm a bull, which I would like to be a bull on Aussie, and I would like to be a bear on dollar, so I would be bullish, especially a bounce off of the pivot profit zone for bears. I'd very, very much be bullish. So yesterday, this would have been the first opportunity to buy. So I would have had a buy zone here. Okay. And the second buy zone for me, remember plan A and plan B, would be here. So that would be my trade plan for the week. Okay. But once again, I would have done this on Friday or Saturday. Okay. So my first buy would be here. That'd be plan A. Right? I take a screenshot of that, or I print this out twice and then I just draw it with marker. That's another thing to do. And I would put it on the wall. Okay. The second thing would be down in here. That would be plan B. And I guess plan C would be if it just skyrocketed on Monday up to here, then drop down to the 4-hour 21 and then there. So, but it didn't do that on Monday, so I wouldn't have adjusted. So as of Monday morning, it'd be plan A or plan B. Okay? That's it. What do you think, guys? Will you please put in a thumbs up? Is that all right? Is that helpful? I mean, that's how you should trade. You know your bias. You know your reasoning. This is all prefaced with a double bottom at a logical reversal point. So now I have permission to start putting together bullish trade plans if I'm a bull. Has the market reversed yet? No. But under these conditions, it might. Isn't that cool? So make sure you visit Traders Way, guys. At least open a demo account. If you guys are new, open a demo. Show some respect and some courtesy. You know, we're providing these webinars for you every day. That would be one way for us to measure that we're having a positive impact by doing these webinars every day. Visit tradersway.com. And I guess I'll see you tomorrow. I think that was good, right? We're done? Yeah, I think we're done. Also, if you're new, please subscribe to the Forex.Today YouTube channel. The reason being, I mean, it's not like I get your email address or anything. What it does is lets you know when I upload a new video or do a live event like today. Okay, so it just keeps you informed, that's all. All right, cool. So peace on earth, may the pips be with you, may our profits be above average. Cheers.